In this video, I'll show you my favorite indicator for swing trading. We'll go step by step through how it works and how you can use it to benefit and get better results in trading. Alright, so here's how it's going to work. In this video, I'll show you one indicator I use, which is the Bollinger Band. I'll guide you through everything that there's to know about it. But I'll do a separate video, which will go to another indicator I use for primarily trading trends. That indicator works super well. It's going to be linked below. It's going to be a free video, so you just have to sign up for it. Don't do it now. Focus on this first. But after this video is done, go in the description below. Check out the link to sign up. Get that free video, which is going to go a lot more in depth on how to use that indicator, which is used for trends. I use it for the daily chart all the time. It works super well. So I'll give you all the settings, everything behind it. You can have a look at that. But for now, let's focus on this indicator here, which we'll talk about first. Alright, so this indicator I use here is the Bollinger Band. I'll go through all it means. Maybe you didn't use it right the first time. And I kind of want to go through some first things first to get you to use it properly in the beginning. Alright, first let's talk about the math behind Bollinger Band and why it works so well in the market. So Bollinger Band are based on a principle that is the bell curve. So it says that for any given, I'm not doing straight at all here, but for any given set of data, it will look something like this, like a bell curve, right? So you're gonna have extreme points, something like this. So what this means is that you're gonna have some times where if you look at the price, if you look at any kind of data set, right? Sometimes it's gonna be here, but that's the frequency on the y-axis, so the top axis here. What this says is that sometimes price will be in any kind of these points. Sometimes it's gonna be all the way far to here. And this, by the way, at the bottom is standard deviation. Now I'm gonna go with simple on this because I wanna make it complicated. Price will usually go and stay around this level here. That is your average. Now, sometimes it's going to go a bit more than that. It's going to go to here, right? That is one standard deviation. So that is one standard deviation from all the way here to all the way here. And then price sometimes will go even more far. It's going to go all the way to here. That is 2. And sometimes it's going to go all the way to maybe here. And that is like very rare, but it happens. So 3. What we can take away from this is the fact that there are probabilities. If it's a normal distribution curve like this one, which is not very straight here, but if it is, then price will be from here to here, one standard deviation to one standard deviation on both sides. It will be there for around 68% of the time, okay, roughly. Now, 2 standard deviation, so this will be from here to here. It will be there around 95% of the time within these limits. And then 3 standard deviation from all the way from here to this side here. That's pretty far. Not happens a lot, of course. It will be within these limits around 99% of the time. So only a few times this is going to go out of these limits. Now that's how Bollinger Band works. They give you an average, which is a line like this that follows price. And then it gives you a standard deviation, which are lines at the top and at the bottom that follow price. Right? That's the idea. So at the bottom, you have the same line, and these should be roughly equal, right? Based on how price looks. Now, sometimes price will go ahead and go out of these lines, right? So price will go something like this. It will be here. Then it might go here. Then it might go up a little bit here. It's going to go down. Then it might go a little bit here and go up. Okay, you get the idea. It's kind of how this works. Now, this is here the 5% of the time it goes out of the Bollinger Band at 2 standard deviation, right? Over here. 2 standard deviation is 95%. It will be within the bands. 3 standard deviation, if you change this setting here to 3, then you get a line that's more like this one over here. Right? Then price will go less outside these limits. It might go only 1% of the time outside these limits. And we can treat this, of course, because it means that if price goes back out, it will likely come back inside again. Now back on the chart, I'm done with these math classes here. When price goes out of the Bollinger Band, like here we are on USD CAD, it will likely come back inside. Example here. Another example here. One more example here. Okay, one more here. Price always come back inside the band. Now maybe not right away, instantly, but it comes back within the band pretty soon after that. Now look what we've got right here in the market on now it's Sunday for me. Boom. Outside the Bollinger Band. It will come back inside, probably mostly soon. So that means that we can use Bollinger Band for a reversal method, which is the way I'm favoring to use it. You know, most people will say, oh, well, indicators are lagging, they suck, so I'm not going to use them. And yes, that's true. Like, the Bollinger Band doesn't give you where the price will go next. No indicator, I think, does that. And even if you try to do this manually yourself with the price, you cannot really figure out where price will go next with a very high accuracy. But if you look at Bollinger Band, it's based on statistics And probabilities. We know that when price is outside the band, it will come back inside the band. We know that if price is within the band, eventually it will go out of the band. And we also know that, this is a big factor too, pay attention here, okay? If price is above the middle band, this is our middle band here, you can see it, it's in red on the chart, or somewhere like orange. If price is above, then it's likely to go up from there. If it's below, then it's actually to go down from there. Right? We see here price drops below the middle band, dropping below the average, kind of like a moving average. Then it's going down more below. Okay. Price is somewhere over here. It goes above. Then it's likely to stay above the middle band. Now I can go back to bounce, like we had an example here. We drop back. Right here, we drop back below the middle band. And then we bounce off of it with the big engulfing candle. That gives you a nice trade too if you want. And then we go back up. So here are the trade setups you can use with Bollinger Band. First one, I'll give you a couple of them. First one is when you've got price going outside the band, coming back within the band. Now, I personally use myself an engulfing candle because it gives me a good idea that price will come back within the band. I don't want to just like buy when price go outside, because look at what happens here, right? What if we just kind of take Bollinger Band as a true tool? We just go short whenever it goes outside the upper band. Well, we can get kind of unlucky that way. Here, price went above the band. But look how it continues even up after that, all the way to here. But look how we have an engulfing candle here. We have my little triangle, which is my custom indicator I use to spot the setup myself. It shows me that price went up, big bullish candlestick right over here. But then it went back down with an engulfing candle. So it closed below the low of the previous one, right? See the lowest here, we closed below the low. That is a very strong setup. One of the best setup I've had in all my trading career for over, whatever, 10 years I'm trading now, 11 years. This is one of the best ones. Stop loss goes above the high, and then we can target either a move back to the middle band at minimal, or we can target a move back to the other band. I've tested this a long time. I know that for me, a 1-to-1 and a 2-to-1 target works best, especially on these higher time frames, but you can do whatever you want. Like, these are logical places to exit. I'm just using targets that are more fixed and that I've tested to be the best. By the way, this setup here just showed up last Friday at my time here in Canada. So we have this engulfing candle, again, closing below the lower band over here, followed by an engulfing candle that closes above the high of the previous candlestick. I put my stop loss below the low. I'll go long whenever we start trading on Monday or Sunday here, with an entry above the high. I don't want to be entering right now. I want to wait for price to confirm that it goes higher. And I'll wait for a little candlestick to go just above here, just above the high. Show me that we are going to trigger the high, go beyond that, and reverse properly with this market. Okay, this is how I use it. This works really well. I want to wait for price to go above this high of the engulfing candle. Okay, so it needs to go somewhere above here if I want to be going long in this kind of market. Okay, that's very important. But that's one setup. Great setup, works super well. But you want to make sure you use this with the right market context. This needs to be used when market is sideways. You don't want to go short in the market that's trending up and up and up. You don't want to go long in the market that's falling down completely. You need either a good support area, a good resistance area, or at least somewhere that the market is like going sideways between two levels. And then you can use this to trade to your advantage. This only has an edge, like any strategy, within the right market context, not anywhere outside of that. Okay, next setup here. I love this one a lot because it kind of goes against psychology of people in the market, and you can really use this to your advantage. It works super well. Now, we need to be in the right market context for this. Once again, we need to be in a trend, or at least somewhat of a trend. This has to be a very strong trend. I usually don't do this in like very strong trend because it doesn't work too well. And I'll show you how that works and why it doesn't work well. But if we are going in a moderately trend, or we go back to the middle band of the Bollinger Band quite often, it's a good place to trade this. Now we have price on USD CAD that's going sort of downtrend, sort of sideways, not too strong. But then we start to break below this level here, which is 1.326, and price starts to fall down even more. Now what we need to wait for is a move back to the middle band. Sometimes you have a nice setup for the Bollinger Band, like I just showed you before, right here, right at the bottom of a trend. We don't want to take that because we're not going sideways. But then price will often have that setup, move back up a little bit, and then fall back down from the middle band. It's a good bouncing area, this middle band. Very good for bounce trades or trade continuation trades. So what I want to do here is I want to wait for price to hit the middle band, maybe go a little bit higher, and then give me a nice sign of reversal, like a nice engulfing candle, a nice pin bar, something of the sort. And some people even use that middle band and not look for any confirmation. They just sell when price goes to there or a little bit higher. You can do that too. It's a bit more risky, and you have a tough time to place a stop loss that way, but it's still doable. Now, you have one example here. We also have an example over here where you have a failed Bollinger Band reversal setup. The same setup I showed you the first time. It's right here on your chart. Right there. Okay, that's a good setup. But see how we are selling at the bottom of the trend. We failed the setup. We go back up a little bit. Then we get this sort of inside bar setup here. We also have a pin bar, which to me would be the preferred way to go short on this. Stop loss goes above the pin bar, which is quite a big one. There, perfect. And then our targets will be, I would say first target is the bottom band, at least to get some profit off first. And then the second target will be either a trailing one, which you can keep for quite a while on these moves. Like you can almost let it go until you see price rejecting somewhere of this middle band and this lower band. Maybe somewhere like here. All right. Or you just do your testing, figure out which level is best, and that will be maybe like a 3-to-1 in trends. So we leave it for 3-to-1. 3-to-1 is triggered right here. Okay, not a very strong trend, but we can still make good profits with that bounce of the middle zone of the Bollinger Band, the middle band in that case. Okay, now what happens on this when you have big trends? It doesn't really work well. This you really want to avoid using Bollinger Band when you have strong trends and strong moves in the market. Best example I can give now is Bitcoin, because Bitcoin's been trending for a while. But the thing is, with these trends, you're going to miss out the best of the moves. It's not going to go back very often to this middle band. Look how here in Bitcoin, we just go up and up and up and up. Come back a little bit. Don't have any sign of rejection that much. Up and up and up and up. Don't come back much here. We have a gap. We go up and up and up and up. We miss all the whole move. When it comes back down to the middle band, we usually fail with this trend in that case. Like we kind of go back down to the lower band. Don't have any good setup much in that case. Then we go back up. It's a bit of a messy situation to trade Bollinger Band with these trending markets. You want to be able to avoid this by trading a different indicator I use a lot, which is much better than moving averages, much better than Bollinger Band for trends. And it's all into the course I've put below. It's a free video course. You can check it out. I'll get you to my other indicator I use for trends. I use it for daily charts. You can use it, of course, for swing trading. It's kind of like a multiple time frame indicator. It works super well, in my opinion. So don't forget to check this out below. I want to know also how you use Bollinger Band yourself, if you use it or not. Let me know in the comment section below. Let me know if you use it, yes or no, and then how you use it, if you use it. I want to hear what you think. Sometimes people have different ideas. There's other strategies about it that you can use. I want to hear your thoughts below. And I'll catch you back here, of course, in the next video pretty soon. Ciao.